1.8 million Thrift Savings Plan participants now use the Roth option. Assets are up 64% since the start of the program. Kim Weaver's Director of External Affairs at the Federal Retirement Thrift Investment Board. Kim, thanks for coming on the program. I'm old enough to remember when the Roth wasn't a thing yet. Have you tried to drive participation into the Roth program by doing outreach? Have you done outreach just to say this is something that you can choose and people are doing it themselves? What's driving this level of participation, do you think?
Well, when we created the Roth option back in 2012, it was with the military in mind, because if you're young and you put your money into the Roth TSP and you let it grow, that is going to be quite a tax advantaged account when you retire. And so, of course, in 2012, we didn't know that BRS was coming. But now that it's here, that's really what has driven the increase in the Roth participation. We have about 41% more accounts and about 60% more money just from when BRS went live in January of 2018.
So this is hockey stick growth. This isn't linear or exponential growth. This is just a big swing up all of a sudden.
And it's entirely logical and exactly what Roth was designed to do, right? You put your money in, after tax, that money will grow. You won't pay taxes on the money that you've contributed. You will have to pay taxes on the earnings, but it is still an incredible advantage that you have and will continue with you through your career.
Looking at some of the material from this month's board meeting, I detected in one of the slides a potential freakout deterrence. Correct me if I'm wrong. You're changing the name of the record-keeping services acquisition to Converge. Explain what's behind that, and then I'll tell you what I saw.
Okay, well, the record-keeping services acquisition has been a multi-year effort, and we awarded that contract back in November. And as we've discussed before, we're now in the transition phase. It'll go live in the summer of 2022. And as the name was, it was acquisition. And so we have changed the name of that program, the transition program, to Converge.
All right, so what this slide says is Converge is a refreshed identity for the program for internal thrift savings plan and partner agency use and communications only, part of our larger change management strategy. Here's what I think was the freakout mitigation. Converge is not replacing our existing thrift board or TSP branding. Like, was there a concern that people thought there were going to be some kind of big changes coming?
Well, internally, people wanted to know what exactly the branding effort was, because obviously we're fairly proud of our branding for the TSP and people's recognition of the TSP. And so there was concern that Converge was sort of going to grow and expand. And that bullet that you refer to was a clear signal that that's not what's going to happen.
Another item undertaken at the board meeting is multi-asset manager, the multi-asset manager project. What is that, and where are you on the timeline of that?
Well, our board members wanted us to add an additional fund manager to mitigate a very small risk, a black swan event, and so that if something happened to our current fund manager, which is unlikely, but if it happened, we would still be able to continue trading. Our participants would continue to be able to move and invest their money. And so we, in mid-April, April 16th, we did the first transfer of funds to the new fund manager, State Street, and that was 10% of the C fund, which is still a fairly hefty chunk of change. And that went exceedingly well. And so we will now move to the S fund, which is more complicated, and then to the F fund, which is even more complicated.
What, philosophically, either about this change in particular or changes like this in general, what generates an interest among folks inside the thrift savings plan to say this is something we need to take into consideration, or this is a change that we need to make? Are there particular events in cases like this, or Is it something where you're continuing, as you've said many times, to parallel what similar plans are doing in the private sector? Or what drives these kinds of changes, Kim?
There's any number of things. There could be an event that causes us or our board members to think we should explore something, but our board members have extensive experience in retirement and defined contributions. And so in this case, it was their knowledge, their background, and their understanding that the thrift plan was going to continue to grow in size, that they thought that it would be a prudent thing, which is exactly what they're supposed to do, to add a separate new fund manager.
We have about 30 seconds left. Kim, any sense that this will change the fee structure at all, that by having a smaller piece in each fund, that it will impact the fee structure at all?
The second fund manager should have a minimal, if any, impact on the investment expenses. We don't expect it to be significant at all.
Kim Weaver, thanks very much as always.
Thank you.